A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a surprising turn of events, the Senate has unanimously passed the No Tax on Tips Act, a piece of legislation that could significantly impact the financial landscape for millions of American workers who rely on tips as part of their income. This bill, which has garnered support from both sides of the aisle, is reminiscent of a proposal made by President Donald Trump during his 2024 campaign, and its passage could signal a shift in how tipped income is treated under federal tax law. The No Tax on Tips Act aims to create a federal income tax deduction of up to $25,000 per year for workers who typically receive cash tips, provided they report these earnings to their employers. This legislation was approved by the Senate on Tuesday and is now set to move to the House of Representatives for a vote. To qualify for the deduction, workers must have an annual income below $160,000, a threshold that will be adjusted for inflation in subsequent years. Currently, the IRS mandates that workers who receive cash tips of $20 or more each month report these earnings to their employers. This includes tips received directly from customers, shared tips from colleagues, or those processed through credit cards. During the recent presidential campaign, both Trump and Vice President Kamala Harris expressed their support for eliminating taxes on tips, particularly during their appearances in Nevada. The House Ways and Means Committee has also included a no tax on tips provision in its version of the bill, which could further enhance the chances of its passage. Senator Ted Cruz, a Republican from Texas who introduced the bipartisan bill earlier this year, emphasized the importance of this legislation for hardworking Americans. Whether it passes freestanding or as part of the bigger bill, one way or another, no tax on tips is going to become law and give real relief to hardworking Americans, Cruz stated on the Senate floor. The implications of this legislation are significant. According to estimates from the Budget Lab at Yale University, there are approximately 4 million U.S. workers in tipped occupations, representing about 2.5% of the total workforce. These jobs primarily include positions in the restaurant and hospitality industries, as well as services like taxis and food delivery. However, many tipped workers are part-time employees, which raises questions about the actual benefits they would receive from a tip exemption. Alex Muriano, a senior policy analyst at the Tax Foundation, pointed out that while the bill could benefit moderate to middle-income workers, it may not provide substantial relief for the lowest-income tipped workers, who often do not pay federal income tax due to their earnings falling below the standard deduction threshold. For the lowest-income tipped workers, it provides no marginal benefit, Muriano explained. It would benefit moderate to middle-income workers substantially. Critics of the bill have raised concerns about potential complications that could arise from a no tax on tips policy. There is a possibility that the introduction of tips could spread to new occupations or that existing occupations could shift towards a greater reliance on tips as a form of compensation. Additionally, there is a risk that income could be misclassified as tips to exploit the tax benefits offered by the legislation. Muriano also highlighted the fairness issue inherent in the bill. For example, a waitress earning $35,000 with $10,000 in tips would benefit from a tax exemption, while a retail cashier earning the same amount would not. Why does the cashier pay full income tax on her income but the waitress gets a very substantial tax exemption? He questioned, emphasizing the need for equitable treatment of all workers regardless of their income sources. The swift passage of the No Tax on Tips Act in the Senate has generated a mix of reactions. Senate Minority Leader Chuck Schumer acknowledged the efforts of Senator Jackie Rosen, who co-sponsored the bill, and highlighted the importance of providing tax relief to working Americans. Working Americans, from servers to bartenders, delivery drivers, and everything in between, work hard for every dollar they earn and are the ones who deserve tax relief, not the ultra-rich, Schumer stated. If the House of Representatives approves the bill and it is signed into law, the Treasury Secretary will be tasked with publishing a list of occupations that traditionally receive tips within 90 days. This list will help clarify which services are eligible for the tax deduction. In conclusion, the passage of the No Tax on Tips Act represents a significant legislative development that could alter the financial landscape for millions of tipped workers across the United States. As the bill moves to the House for further consideration, its potential impact on the workforce and the economy as a whole remains to be seen. Advocates for the bill argue that it will provide much-needed relief for blue-collar workers, while critics caution against the potential inequities and complications that could arise from such a policy change. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.